Rigoli. I am here today with Erica Fluvog and Jennifer Dandridge, and we are going to be talking something a little bit about something a little bit different. We are going to start touching on the challenges that we're seeing consumers in our own generations facing in today's real estate market. So I myself, I am a millennial, but I am a much older millennial. I relate more to Gen X. So I am a Zennial. I was born in 1982. I now have been in real estate, at least on the realtor side of things, since 2018. I come from commercial property management background, did that for about 20 years. So I come from a little bit of a different background. Like again, like I said, commercial property management, and then right into I had started flipping houses, got my real estate license, and got laid off in COVID, and have just been helping people with buying and selling homes since then. Absolutely love it. I'd like to also have we'll start with Erica introducing herself.
Hi, my name is Erica. I am in the millennial group towards the bridge of Gen Z. Um, I have 15 years of IT experience. Now I'm in real estate full time. And I kind of have been going through a lot of like challenges when it comes to like buying a home as a first time home buyer and, helping other first time home buyers understand the challenges and how to overcome them with different programs and everything in the real estate market.
Awesome. Jen.
Hi, I'm Jen, and I've been in real estate. I want to say I'm coming up, I think, my fifth year, but I fall into the Gen X category. And one of the things I've come to see is a lot of people in this time, if they've already got a home, chances are they're already locked into a lower rate. And so some of them are hesitant to sell. And those that aren't are a bit hesitant to buy, because their children are grown, they're affording college for them, or, they're taking care of their parents. And so, they're financially, it seems like they're already extended too far out. And I am all about bringing the education to them and just really trying to open their minds a bit more about why it is still a good investment in the long run. It's not the short-term thinking, it's the long-term thinking. So,
Yeah. So you said in your generation, you're really seeing those people that are sandwiched with, they've got kids coming
yeah.
in, getting ready for college, and then they've got parents that are needing help and may need to actually, I've seen that generation a lot where I'm seeing multi-generational living because
Hmm.
I'm seeing people looking for homes where they can take their parents in and they've still got their kids that may not fully be off to college or on their own yet or cannot afford to be on their own because of all the college debt, which I think Erica, we were just having a conversation about that. Can you explain to me what you're seeing with the college debt and the people in that generation and schooling?
Yeah, so college prices obviously run different costs associated, whether you are in state, out of state, which school you go to, if you're a commuter, if you're a resident, how long it takes you to complete school. And a lot of people have to immediately start paying that college loan debt back almost 6 months after you graduate. Sometimes it's even during your process. And it's just one of those things where it compounds with interest as well. And you get buried in the student loan debt, and it makes it hard to try to save for a down payment or being able to qualify for a mortgage.
Yeah, I was just having a conversation with someone the other day, and she says she's actually working with a lot of Gen Z, which we will have some of our other uh, associates come on with us to discuss more about Gen Z. But what I'm hearing, like these are the people that are coming out of, schooling, and they're stuck with huge loans that are crippling and make it hard for them to be able to afford a home when they have all this debt that they have to pay off. And it blows my mind because I went to a local school. I had a lot of financial aid because my parents were in a bad financial situation. So I got a ton of financial aid when I got out of, and I did college in 3 years. I did as many credits as I could get in high school, got out in 3 years. And I think my debt was $25,000. That was over 20 years ago. And I'm hearing numbers like closer to 90, 100, hundreds of thousands of dollars. And I can't imagine having that coming out of college and needing to afford not only the rents that are out there, but the mortgages. I'm helping people buy houses and their mortgages are like $4,000 a month. And I
Mhm.
can't fathom that.
Yeah, and you touch upon it real great too, the interest rates. There's different interest rates, whether you're a public student loan or a private student loan, depending on when your loan was originated. And then you pair that with the mortgage interest rates in the market and how they fluctuate. I mean, I know we're in the high fives now, low sixes, but I mean, if we're at 7, 8% interest rates compared to what it used to be at 2, 3%, it's crippling. It's hundreds of thousands of dollars over the span of the loan.
Yeah.
Mhm.
And I look back, I've bought multiple homes. So when I first, let's see, I graduated, I was 20, I want to say, maybe 21. I was 21 when I graduated. And I bought my first house when I was 23. And at that time, that was when the market was, it was 2005. So we were bidding wars, everything was going crazy, but it was shady lending practices. And we were all getting into these loans that were okay, I think we had like maybe 7% interest, but it was supposed to like they were all variable rate. They're like, you can buy a house, you don't have to put any money down. We're going to get you a second loan, and don't worry about the interest rates because you'll just be able to refinance before your interest rate, your variable interest rate goes up to like 12%. So I was like, okay, this is great. And I bought two houses, one in 2005 and one in 2007 to do that. And then the markets crashed and I couldn't refinance my houses and had to short sale both of those.
Mhm.
But like I was looking back then and the interest rates to me weren't bad, but now my mortgage is at 3.25 and I'm in that crux where I have so much equity, but I don't want to refinance and get stuck with one of the interest rates now. And it's only we're at what, 6%?
Mm. Yeah, yeah. I remember back then too, when you were talking about the shady practices, a lot of people were getting caught up in those large balloon payments. They were taking mortgage terms that, were short-term loans, 5, 6, 7, 8 years. And then what was happening is they were forwarding their payments. And then at the end of that term, there was this large lump sum payment that would be due, and a lot of people couldn't afford that, and it resulted in a lot of short sales, foreclosures. And I
Mm-hmm.
do think that that was one of the real turning points in the industry, because it became a real crisis. People, they couldn't afford it.
Yep. And so you have people that have lived through that, right? And we've learned through it. I remember my husband was like, I never want to be a landlord again. Because both of the houses we bought were multifamilies, and we were dealing with a lot of other stuff and not being understanding the whole landlord side of things back then. But that those issues we had scarred us, and
Mhm.
we are a lot more cautious now with the decisions that we make. And again, like so he's Gen X. And like I said, I lean more towards the lining up with Gen X, even though I'm a millennial. But like we have that experience now where we've ridden that and we're more cautious.
Mhm.
And then I'm guessing like again, I wish we had some of the other girls on this morning, but again, Erica relates more to is more on the younger side of things. Are you seeing that people are being a lot more cautious, Erica?
Well, 100%. I mean, I only just bought my first house last year and I was 33. So, I mean, home ownership is a goal for me because I want something that I'm not paying somebody else's mortgage on. But I mean, I remember I had an opportunity to buy a home in 2011. It was a multifamily in Worcester, and I think the three family was going for like $299,000. That same multifamily is like $899,000 now. Like
But no one could have
it's
seen what was going to happen with the market.
no, I know, but like it just shows the span of time of like how your investment grows with
Mhm.
you. And I know a
Exactly.
Yep.
lot of people the market is a little stagnant. The inventory is not coming up as quickly as, some of us would like to jump on these interest rates we have now. Because like you said, Holly, you don't want to refinance because you have a perfect rate almost of 3.25 versus having to refinance now you're at almost 6. So
Yeah.
Yeah.
I remember when I bought my first home, I want to say early mid 30s. It was back in 2014, and I was the first person in my family who purchased a home. My mother to this day has never been able to.
Mhm.
And so I remember back then, um, we had bought this beautiful colonial, and it was a foreclosure. And what was it? I believe we won the offer at about 167,000. And it was a 3 bedroom, 2 bath, finished basement, beautiful area in Cranston, for $167,000 with a 3.2% interest rate as well. And when you look at the market now, it's like, where is that? That's not there. And sometimes it is a little hard, I think, for us, Gen Xers coming from a period where we were buying houses far cheaper, at far better rates to kind of where we are now. So I do see where some of the hesitance is in that. But I will say, in doing that, when I did end up having to sell, I think what some people forget is the amount of equity that you can build is sort of like a savings. You know what I mean? And so when I
Mhm.
sold, not only was I able to buy my second home, yes, it was at a higher interest rate, but you're not married to that rate. You can eventually refinance it down, but I was able to buy my second home, and I had a large savings, that I could put away. And so there was still a benefit. So, you got to kind of take the good with the bad and make a decision for what is good for you.
Yeah. And to that point, property values, even when we come through a housing crisis and they dip, they are always going to appreciate over time. So when I short saled my houses, like I'll go through, like I bought one house, I bought it for $299,000. I short sale that was in 2005. I short saled it in 2000 and either 12 or 13 for $220,000. Okay. That house sold about 2 or 3 years ago for $540,000.
Oh my
The house,
God.
the house that I bought, my four family I bought for 300, I want to say it was $400,000. I short sailed it for like $230,000 in 2012, 2013. And that house now, if I were to look at that house, we're looking at 650, $700,000.
Yeah, when we bought the house in 2014 for the 167, we sold it, what was it now? Two and a half, 3 years ago, and we sold it for almost 400. And we
Yep.
did minimal work, minimal work.
So the property values are always going to go up. And that's why it's like,
Mhm.
I want my goals, and I've been saying this for years, is I want to buy more properties. I want to buy more multifamilies. I want to buy in other states. And I keep saying, I want to do this. I want to do this. And I just keep watching the prices go up. And it's like the time to buy is whatever time works best for you. But you have to understand that no matter what, like if you're waiting for things to drop, okay, if it's possible you might catch a deal somewhere, but for the most part, these prices are just going to keep going up. And so to get into a home, you're better off getting in now if you can afford it. But I will say the lenders that I work with now compared to the lenders that I dealt with all the shady practices and stuff like that back in the day, most of them will walk you through and explain to you, this is what your payment is going to be. This is what to expect. Do not get in over your head. And there's so many more restrictions in place to try to make sure people are not going to fail and we're not going to have a housing crash.
Mm. And I do think that there are more lending programs available now than there ever were back then. And I do think a lot of them are geared more towards first time home buyers. I think there really is a push to try to help them a bit more,
Yeah.
programs with zero down or closing assistance and whatnot. A lot more options now than there were back in the day when I bought.
Yeah,
Hmm.
and each lender is different too, from the interest rate they're willing to offer to the program to sometimes the incentives, what they're willing to pair with. Because
Mhm.
Mass, Rhode Island, Connecticut specifically have first-time homebuyer programs for down payment and closing cost assistance. VA
Yep.
loans are usually zero down. There's a ton of different programs, credit scores, based programs, things like that. And I
Hmm.
think too, a lot of people might think a house, even though the price tag, if you will, the home value goes up over time, maybe there's a misconception that it's like a car. When you drive it off the lot, it starts appreciating. And that's not
Hmm.
necessarily the case. And there's also tax benefits too that I think a lot of people don't understand, um,
Hmm.
that you can apply, from depreciating an asset if you're an investor to tax credits if you bought it that year, things like that, how much work you put into it.
Hmm.
Yep.
Hmm.
Yep. So to kind of look back at, because I want to like kind of summarize and make sure we hit on all the points that the different generations are hitting or for challenges. So in Gen X, we're seeing the sandwich burden, right? We're trying to manage our own lives with our own children and then our parents. Like, I mean, my parents are, I know they're not, they're pushing 70, but they've definitely got some medical things where, we have to juggle those things. And actually my husband's father is 80. So like, you look at it's like how long do they need to be in another house? And then so you've got like again, you've got that sandwich that you're trying to work on. And then what is there? There's also maintenance trap, right? Many older
Mhm.
Hmm.
we're in New
Yeah, the
England.
older homes.
We're in New England. We have so many older homes
We do,
that
and our weather does not help it sometimes.
no, no. That makes it really tough. Like, because I look, even my house was built in the 80s, but since we've been here for like 13 years, we've replaced the roof, most of the windows, most of the outside doors. We've painted the house twice. The deck has had to been resupported. And then even just this last storm we had, I had like one of my structures collapse and the gutter blew off, and there's just always the stuff that you have to do. And especially if you can't afford to get in, like on the younger end or wherever you are in your purchasing, if you can't afford to get into a house that's picture perfect, you have to put a lot of elbow grease into that and a lot of time and money into fixing those older homes up.
That's very true. It's very true. But I do think that, you know, I think as humans, we do tend, as much as we say we don't want to, we do tend to think more on the side that scares us a bit more, like with all the examples that Holly gave, like that was one of my first concerns is, oh my God, well, what if this happens? And what if that happens? What if we don't have the money for this? What if we don't have money for that? And fear is a big thing, it will take you over. But then, there are a lot of positives as well that go into it, but it's getting past that first bump where you're like, but what if I can't? But what if I can't? But what if I can't? But what if you can, And again,
Mhm.
you always have to make the decisions that fit best for your family and for you financially. But you really want to compare the options, and buying a home and how quickly you buy one, it's not a race. You want to get the home that's right for you, of course, but at the end of the day, there are so many more benefits to owning a home than there are to renting, especially right now.
Absolutely.
You- You'll see on social media that there's all these hacks and everything. But I mean, Instagram, Facebook, TikTok hacks, you got to really talk to a licensed real estate agent and a licensed mortgage agent, lender, and just make sure that, it's all in the up and up. You don't want to be doing a hack that has serious consequences, we're licensed, the three of us in Rhode Island, Mass, Connecticut. There's different laws and regulations across the state, across the nation, and having
Hmm.
somebody in that area that you're looking to buy and or sell with, even invest, you gotta have your team of licensed professionals backing you to make sure you're not having a misstep.
Yeah. And the other thing I would recommend too is even if you're not ready to buy, you're just contemplating the thought, reaching out to a realtor and a lender is crucial. Let's say you own a home and you're thinking about doing improvements to the home, right? There's some things like you really need to take into consideration. For instance, solar panels. Talk to a realtor, talk to
Mhm.
an attorney before doing something like that because I've had multiple clients put themselves in tough situations getting solar panels before selling a house. Like they are literally losing thousands, like almost $100,000 in some cases because they've made the decision to do that, doing work without permits,
Mhm.
right? Hey, why does the town record show that you only have one bathroom when your house is a two-bathroom house or a four-bedroom house when the town records only say it's a three-bedroom house? Well, you're buying a multifamily. What does the zoning certificate say? How many units is that house legally there? Like, you know, we may want to do updates to our house. Just, oh, I can just do this myself. But you gotta, like, anytime you're thinking about doing any updates, making any changes to where you want to go, I think talking to a real estate professional and a lender are very important.
Mhm. I agree. And, the thing about it is when you're working with a real estate agent, that agent keeps in mind what your wants and needs are, and their job is to have sometimes these hard but honest conversations where if a buyer sees this house and they love it and they want it, but after reviewing all of their information and speaking with the lender, it's you would be going house poor over it, right? It's our job not to just say, oh, well, don't worry, you'll figure it out because we just want to get you in that house. No, our job is to put you first. And if that doesn't make sense for you right now, then we would have that conversation with you and say, hey, listen, we know you love this, we know you want this, but financially it doesn't make sense right now. And even if that delays that purchase until either that buyer is in a better place or possibly something comes along that is a bit more affordable to them. And that's why having a real estate agent by your side is so, so important.
Mhm.
And you said
Or a
it
lender
perfectly,
too.
Jen,
In a lender, yeah. Yep.
because one of the things too is like your dream home might not be your first home. It might not even be your second home.
Right.
But yeah, there's different options, different, out of the box ideas that your real estate agent and lender or attorney in those honest conversations can help craft, okay, this can be the short-term plan. We'll
Mhm.
revisit, maybe
Yeah.
it's not the $800,000 dream home that you want. Maybe we look at a three family, get some rental income coming in to support that, let that appreciate, then use that equity to go buy your $800,000 property. I mean, maybe
Mhm.
you don't want to be a landlord. Okay, so we don't look at rental income. Then we look at what you can afford. And, we have your back, our fiduciary responsibility is to protect you when you're our client. And, you're my priority, you're Holly's priority, you're your agent's and lender's priority.
Yeah, I think there is such a big misconception around that your first home has to be your big dream home. And it doesn't always work out that way in the beginning, but it doesn't mean that you won't eventually have that dream home. But it doesn't, you start off small and you work your way up sometimes, and that's okay. I do think that's one of the bigger conversations that I've found myself having with people is, you want to just jump in right away and get this big, huge,
Yep.
beautiful home, and you're proud of it, sure, of course, but that's not in the budget right now. But that doesn't mean that this home that's a bit smaller, that maybe needs a little bit of TLC, can't be just as beautiful as what that home is, and if anything, you're making that home that needs that little bit of work more yours. You're tailoring it more to what you want. And so sometimes, like Erica just said, you know we can kind of help shed light on that. We can kind of help paint that picture for some people where they may not see that for themselves.
Mhm.
The
And they need that
analogy
on.
is the
Go
analogy is
ahead.
you gotta crawl before you can walk, and you gotta walk before you
Yeah,
can run. Not
yeah.
going 0 to 60 in what, 3.9 seconds, 60 seconds, whatever it is.
Yep. Yep. And life changes too. Like I think about the first house I did buy, it was a two family. My apartment on the second floor, I think was somewhere between 708 or 700 and 900 square feet. Like it literally was just me, my husband, and my cat. When we moved, actually, no, we didn't have the cat. The cat showed up there. Just me and my husband. We moved in. We had our first child there, and we were like, "Whoa, we can't fit in here anymore." We had to like move to a bigger place. And even now, like now had since had another child, and my children are bigger than us now. And our house is now like, hey, this isn't. I would love to go buy another house right now, but at the same time, I'm like, I've put so much into this one, like I want to like improve on this one, but there are options, right? Now
Yes.
there's so much equity in homes I could take out and refinance and build bigger, and like there's just, but unless you speak with a professional that's been there, like it helps to have that outside the box. I will run into so many people at open houses, or I'll have an open house and people come in and they don't have agents.
Hmm.
And I'm like, okay, like, and they're looking at things, but they don't have agents, they don't have a lender, they're not pre-approved. Like, how do you expect to be able to buy a house if you haven't gotten pre-approved? Like, I will let people know, like, we're not putting offers down on a house unless you have a pre-approval. Like, you can't. Nobody's going to accept it. There are steps you need to take.
And to add on to what you just said, Holly, I do think a lot of times too is it's good for buyers who, even if you are starting to have the slightest interest in wanting to buy, to talk to a real estate agent, because we network with a lot of lenders, and pairing a buyer up with a lender who can go over all their information with them and say, hey, you know what? Maybe at this time, you're not in a position where you can buy, but we're going to work together. And that lender's goal is to get you to where you can afford a home. And I don't, I can't stress the importance of talking to an agent who can connect you with the lender and getting that process started first, because it will give you
Mhm.
a far better idea of where you stand, what you need to work on, get your goals established for where you want to be financially, and sometimes that could take a little bit of time. And so what I usually, when I talk to buyers, one of the first things I ask them is, have you spoken with the lender? Are you pre-approved? And the response is usually, no, I wasn't sure where to start. That is always going to be your starting point. You talk to an agent and then you talk to a lender, because you
Mhm.
want to allow yourself that time if you have to build to get to a point where you can buy, if you are not there already, and have them put together that file for you and work with you on that.
Mhm.
Yeah, we all have
Absolutely.
checklists ready to go. We have the checklist of what you need to be able to get into that home. We also know what the out-of-pocket costs are. A lot of people, we could have a whole conversation just on what the out-of-pocket costs are. That some people are like, okay, I need a mortgage and I just need to go put an offer in. There's there's a whole flow chart and a whole checklist of things that have to get done and requirements that have to get met. And you're not
Mhm.
following that checklist and you don't know what um the costs are that you're gonna need to pay up front for that's not included in the mortgage for the purchase of the home, it can really derail the timeline.
Mhm. Yeah, and just and the amount you're pre-approved up to also doesn't always have to be the amount that you use. You could be qualified for a $500,000 loan, and a lot of people think, okay, well, I got to get a house that's around 500,000. Well, no, because if you find a home, let's say in the 300,000 range, that's more comfortable for your budget, then absolutely go for that. You don't always have to purchase at the top of your loan either.
No, I try to tell my clients, okay, you may have been pre-approved for this. Now have your lender run what the monthly payment looks like for that
Mhm.
based on X amount of taxes in the area you want to look in. Are you comfortable with that? have the lender work through the numbers with you so that you are at a payment you are comfortable with, not at a house price just to get into the house you want to get into.
Right. Yeah.
Well, does anyone have any other tidbits or anything like that they'd like to share for today? I think we're gonna, like I said, do this as a series and have on some other associates of ours that are more in the Gen Z to talk about that in the future. And we're going to be doing, we're trying to figure out if we want to make it live or we definitely want you guys to send your questions to us. Please send in your questions wherever we post this video. You can actually put your questions below. We'll put an event up actually where we are going to be doing a panel and have a few more realtors with us that are different generations and would love to answer questions that you guys have. Like I said, we're trying to figure out, I think we are going to do it live on the air, but just, please send us your questions and let us know what you want to know. Anything else you guys want to add?
Well, I think we touched on quite a bit today, actually.
Awesome.
And if you somehow stump us, we have a global brokerage. We have a network of agents all over the globe. Try to stump us.
Yeah. I mean, just our office alone, we have 320 agents. I will say, so we are Remax Revolution. We were HomeSmart Professionals, and we happen to all be in the same brokerage, and we're under an amazing broker and have a wealth of knowledge at our fingertips. So we can, if we don't have an answer and you do stump us, we will find an answer for you.
We very much have a challenge accepted mentality.
100%. And we can also have panelists that are in the insurance, mortgage. You guys tell us what you want questions answered. We're not licensed in anything outside of real estate. So if you want to have insurance people come on and talk, mortgage, handyman, anything, just let us know and we'll expand the panel.
This is what we do. This is what we love.
All right. Well, you ladies have a wonderful day, and we will talk soon.
Thank
Sounds
you.
good.
Hey guys, well, I hope you enjoyed this little bit of a different kind of show today. Please make sure you like and subscribe in all the places that you listen to your podcasts, especially if you watch us on YouTube, and Spotify, Amazon Music. If you review us, hopefully that'll get us out there more. And if you like and subscribe, you'll actually get to see when we put our episodes out. Again, I hope you enjoyed the episode today. If you want to reach out to us for any reason, if you'd like to be on our show, if you have any ideas you'd like to share, if you have stories you'd like to share, please reach out to the legit real estate podcast at gmail.com. Have a great day.